What's up, everyone? It's Scotty with MoneyVest. So today we're going to talk about a huge catalyst that came out yesterday, talking about how Enphase is going to be removed from the NASDAQ 100. Yes, this is not clickbait. Enphase is indeed, in fact, going to be removed from the NASDAQ 100. There was a press release issued by NASDAQ itself. I'm going to break that down. I'm going to go over some of the implications on what that might do to Enphase's stock. And there's actually 5 more companies that are going to be removed from the NASDAQ 100 and what might actually be the reason for this happening. Enphase is down a little bit over 3% right now, so we're going to break all that down. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. You get access to all the members-only videos, so over 40 plus lectures and tutorials, portfolio updates, everything's going to be included, as well as the access to spreadsheets, my watch list, find out exactly what stocks I'm keeping on my watch list, my shopping list with my fair values, and of course the spreadsheets related to volatilities, S&P 500, and Discord access as well with over 20 plus channels, trade alerts, trade ideas, buy and sell alerts, everything's going to be included over there as well, and the ability to engage with thousands of members globally as well. Also, do check out the courses, fundamental technical analysis, options, and psychology course, lifetime access to these, and connect with me on Instagram if you'd like. My handle is going to be CastWRP. I do post a lot of interesting stories, posts, polls, portfolio updates, everything's going to be available over there as well. So link's going to be down below. This right here is the press release, annual changes to the NASDAQ 100 index. And NASDAQ today announced the results of the annual reconstitution of the NASDAQ 100, which is QQQs or NDX, which will become effective prior to market open on Monday, December 18th. So we've got some time, but as of December 18th, so after December 18th on market open, there's going to be a reconstitution that takes place, and the following 6 companies will be added to the index. That is CDW Corporation, Coca-Cola Europe Pacific Partners PLC, they're based out of the UK, DoorDash, we got MongoDB, we got Roper Technologies, and we got Splunk. So these are the 6 companies that are going to be added into the NASDAQ 100, which obviously composes of 100 of the largest non-financial, very, very important stuff here, non-financial, largest and non-financial companies listed on the NASDAQ stock market, dates back to January 1985 when it was launched, along with the NASDAQ Financial 100 Index, which is comprised of the 100 largest financial stocks in the NASDAQ as well. And these indexes act as a benchmark for financial products such as options, futures, and funds. And the NASDAQ 100 is reconstituted each year in December, timed to coincide with the quadruple witch expiration Friday of the quarter as well, which I believe is going to be this Friday. Actually, it's going to be the 3rd Friday of the month of December. So that's going to be December 18th. Now, this right here, after the result of the reconstitution, the following 6 companies are going to be removed from the index. We got Align Technologies, we got eBay, and there it is. Our sweetheart Enphase is no longer going to be part of the NASDAQ 100. That's going to be ENPH. We got JD.com, we got Lucid Group, we got Zoom Video. So Zoom's also going to be removed from the index as well. Now, I was going through some of the criteria as to what determines which companies are included and which companies are not. So obviously from a listing standpoint, they should be listed on the NASDAQ exchange. That's pretty obvious if they're going to be part of the NASDAQ 100. So NASDAQ exchange is number 1. They should be publicly offered to an established American market for at least 3 months. So they need to be listed for at least a good amount of, at least 1 quarter. Trading volume, so should have at least 200,000 shares of trading volume. Financial reporting, be current in filing all quarterly annual reports with the SEC, and non-financial, so can't be a financial company, example, banks, insurance firms, hedge funds, all those types of deals. So Enphase meets all these criteria, obviously, right? There's no doubt about it. That's why it was part of the index in the first place. Additional consideration, I think this is where Enphase kind of fell off a little bit, and that was market cap, right? Market cap is actually one of the biggest reasons. While not a strict requirement, companies in the NASDAQ 100 are typically among the largest by market cap on the NASDAQ exchange. And the reason why Enphase might be getting pushed out or basically getting knocked out of the index is because of its poor performance this year in 2023 and the fact that the stock's down over 70% from its all-time highs, right? So if you take a look since 2022, so December of last year, it had such amazing performance. So this was done, let's say last year, Enphase would have been a $338 stock, valued at well over, I want to say like $30-40 billion. But since then, obviously the stock's down over 72%. The market cap has basically just collapsed under its own weight. And as a result, it is now a $14 billion company. If you take a look at CDW, CDW Corporation, one of the companies that's actually being added. First, let me just go over Enphase's yearly performance, right? Because performance is another additional criteria for being included in the NASDAQ 100. So performance-wise, of course, the year-to-date stock's down 61%. So of course, people are going to look at this and be like, okay, it's been a very, very poor performance, down 70%. Market cap has really come down. That's one of the reasons, in fact, could be the only reason why it's coming down. And market cap wise, CDW obviously $28.5 billion, right? If you take a look at what was it, Coca-Cola, CCEP, Euro Pacific Partners, market cap is going to be $29 billion, right? Then let's take a look at maybe a few more companies that are being added. So let's just go back. We got DoorDash. So what's the market cap for Dash here? We're looking at a market cap for DoorDash at around 39, close to $40 billion. MongoDB, so that's going to be, let's see, MDB is going to be that ticker symbol. Market cap's at 27.5 billion, and we got Roper Technologies, ROP. So this is the last one, I think, and the market cap is over $57 billion, right? And Splunk, SPLK. We've got Splunk market cap at over 25 billion. So all companies, all 6 companies that are being added, unfortunately have a higher market cap than Enphase, and that's mostly because of the sell-off that we've seen this year, right? In 2023, the fact that it's down 70%, market cap has come down to 14 billion, and all the other 6 companies that are being added obviously have a higher market cap than Enphase and the likes of Zoom and Align Technologies, the ones that are getting removed. Now, liquidity, I don't think there's any issues there, but sector representation, I don't think there's any issues there either. I think NASDAQ aims to perform into a diverse range of industries, so companies may be added or removed to maintain a balance into sector distribution as well. Maybe there's a reason along the lines for sector representation as well. But I think the 2 main reasons for why this is happening is number 1 here, the market cap, and number 2, the performance. So this right here is the second reason. The company's overall financial performance and growth potential are also considered. Now, growth potential, I think, is one of the main reasons. Why? Because overall financial performance is good, but the growth potential is kind of uncertain about Enphase with respect to higher interest rates. So those right there could be, in my opinion, the 2 reasons why it is actually getting knocked out of the NASDAQ 100, which is going to happen after Monday, December 18th, after market open. So that's actually the reason, but that doesn't take away from the fact that Enphase, in my opinion, still continues to be a very strong player in the solar sector, just because it's not being included in an index which comprises of very specific criteria, and the criteria that they have, Enphase is no longer able to meet those criteria. Doesn't necessarily mean that it's actually a bad company or it's done for. The balance sheet continues to be strong. In my opinion, at least, the growth prospects continue to be strong as we move more towards renewable energy and transition into sort of solar. And not to mention, the management continues to be very confident. And the main driving factor really is interest rates, right? Interest rates have certainly stressed out Enphase in its demand of how much it can supply in terms of microinverters and battery packs. But eventually, if interest rates are going to be lower or getting cut, that of course creates a very, very nice, interesting environment for Enphase to reaccelerate in terms of its demand, in terms of its growth and profitability as well. So yes, it's down a little bit over 3%. I'm assuming on the back of this report. And the next support, in fact, there's 2 days ago, Morgan Stanley also adjusting price target on Enphase from $90 to $97 from $94. Actually, that's a little bit of an increase of price target. But yeah, support level is going to stay put at $92. So this right here is going to be that level to watch for Enphase, with the resistance staying put over here in the $108, $109. You can see that we are actually starting to get rejected at these levels, with the RSI MACD also coming down because it did rally over 50% in the last 3 to 4 weeks. So we're starting to see a bit of a pullback from those levels back under $100 per share. So it's not a surprise, but of course we are seeing a bit of a pullback on the back of that report. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below, and what do you think about Enphase's growth potential? Market cap, right, that's obviously down 70% from its all-time highs from last December. So 1-year performance obviously has been pretty poor from Enphase, so it's understandable why these additional considerations led to this decision. But let me know what you think about the comment section down below. And do connect with me on Instagram. My handle is going to be CasWRP. Definitely do check out the courses and join our Discord and our Patreon. You get access to all the spreadsheets, private videos, ad-free content, including all the Discord channels and trade alerts as well. So as always, happy investing, and I'll see you all in the next video.